also part of TradeThirsty's family, and he and I've been friends for a while. And Micah is one of those guys where you just like, he's that California guy. You just get in his groove. He's super smart about the market. And today he's going to be doing something very specific. So a lot of the things we've learned day in, day out is, maybe how to use a certain indicator or how to trade a certain style or method. He's going to be talking about how to trade the first half hour of the market, which with the volatility right now, if you're going to go in there gunslinging, you better have a good methodology. So I'm going to stop my screen share and give it over to Micah. Micah, you there?
I sure am. How's it going?
What up?
I'm excited. This is going to be great.
All right.
How's my audio coming in?
It's great. You're not going to show us your game face?
I'll show you my game face. You ready for this?
Yeah. I texted him earlier. I was like, show me your game face, yo. I love your office.
How's it going? Thanks.
Good.
Oh, that's great.
Have y'all met before?
I think this is the first time. How's it going, Raleigh?
I'm doing super. No, it's our first time meeting Micah as well. We obviously a lot of emails and texts back and forth, but it's great to see. I like your office there. You even have soundproofing on the back wall there.
That's right. Got to get the sound quality up.
We love that. You'd be surprised at what kind of quality some guys show up with. They'll be over there with their
see a darker chart.
Some candles, apple.
Some candles.
Apple, right. Apple boy.
Yeah, it looks
Apple,
great.
That's what's up. Is that cool? Is that nice and clear for everybody?
Looks beautiful. Looks perfect.
All right.
Fantastic. So it's all you, and you can take it to the top of the hour for us.
Okay, great. Thank you so much for the nice introduction. So I've got a cool little bonus here for everybody today. We're going to be covering a couple things. I want to start by talking about trading the first 30 minutes to an hour of the market. And there's a specific reason for that right now because it's such a huge opportunity. The VIX is still elevated. We have intraday moves that are happening several times a day that usually take several days to happen. And so what we're going to do today is I really want to cover two strategies for you that I think are going to help you create a really balanced trading day. The first strategy is a day trading strategy. The second strategy is my favorite swing trading strategy. And you could use these two strategies independently. You could use them together. But I really find that as a trader, it's good to have a balanced trading day. And so I really want to give you both strategies today. So that's kind of a little bit of a bonus. And here's the real opportunity is right now in the first 30 minutes, 60 minutes, 90 minutes of the trading day, we're getting intraday moves, like I mentioned, that would normally take 5 to 8 days to happen. And so the strategy that we have today to show you is one that we are actually using with real money every single day. And it's been absolutely crushing, especially with this elevated VIX. And I really do think that for those who take advantage of this, it's going to present a life-changing opportunity. And what I'd like you to listen for when you hear me walk through the strategy is how we're managing risk, because that is when a lot of people either don't get right or don't really know how to implement correctly. So really pay attention to how we're managing risk, how we're taking profits, how we're moving our stop dynamically. I think you're really going to enjoy that part of it. And so let's go ahead and take a look at a couple examples. Just as a quick thought, normally if you're day trading a stock like Apple and you get a $1.50 move, it's pretty good. You're going to make with 100 shares about $150 of profit. Lately, as you've seen, we're getting $5 to $8 moves, not only once, but several times throughout the day. With the same amount of shares, the same amount of risk, you're actually able to make about $800 of profit. So the profit potential right now is about 300 to 400% greater than normal. In fact, talking with some of my trading friends and some of the contributors on Wall Street AO that I work with, they're like, we've been waiting for a market like this since basically 2008 when we had a lot of volatility. Again, some people run away from this kind of opportunity, but those who are able to harness it by using really good risk measurements can make game-changing amounts of money. Okay, so here are some of the guidelines that we're using currently for day trading. I've got some really clear examples I'll show you as well. We're basically using a 2-minute chart. It's a very fast-paced kind of trade. The most important thing that we're going to use to determine whether we're going to get into a long position is if the stock opens above the 200 simple moving average. Again, this is on a 2-minute chart. Okay, we're only going to be interested in buying and going long on the day trade if it opens above the 200. Okay, we could use the candle size to determine risk and position sizing, which I'll show you in a moment. And as a note, If it opens above the 200 and it starts to sell off, we're not going to short it. It's simply just a no trade. Okay. So really simple. Here's the rules for our day trading strategy, again, using Apple. Okay. We're going to look for a gap above the 200. The 200 is this red line. Now, this is a 2-minute chart. Okay. We're going to go ahead and let this first 2-minute chart actually close. What this allows for us is it allows us to establish what we call range. Now, we're going to look for a couple consolidation candles. If we start to break below this 2-minute chart, there's no trade. Now, if we consolidate and the consolidation happens above the 200, again, on this 2-minute chart, what we want to do is we want to place a buy order right above the high of the day, which you can see here in step 3. Our sell or a stop is going to be right below the low of the day. And as the position, if it gets triggered, we're going to move our stop up. And I even have a way that we actually add to our position that I'm going to show you as well. It's kind of unique that I think you're going to like, that allows us to really snowball the profits in our favor. And so I love interactive webinars, by the way. So I've got the chat room open here. If there are any questions along the way, please stop me. I want everybody to get this. So I'm going to be looking over to the side every once in a while, making sure all the questions are getting answered and everything like that. Everybody up to speed so far on the rules? We're looking for, on a 2-minute chart, a gap above the 200. Again, this isn't a daily 200. This is just a 2-minute. Okay. We're going to not necessarily get in on the first 2 minutes. We're simply going to allow it, the first 2-minute candle, to close. That helps us establish what we call range, right? Which is what we use for risk and position sizing. If we do get the consolidation, which I'll show you in a moment, we did, we're going to place our buy above the high of the day. It could just be a few pennies. And our stop is below the low of this candle. Yep, the inverse would be true for shorting. You're absolutely correct, Scott. I've got a slide here to walk you through that. Somebody says, you rock, dude. Let's do it. I love it. Do you only trade this for Apple? No, we've got a list of about 5 to 8 stocks that we use over and over. Yep. Cool. All right. So in this example, you can see the stock clearly opens above the 200, and we're not interested in trading the first candle. We basically just want to wait for some consolidation. Okay. So once this 2-minute candle closes and it's consolidating, this is where we get to put our brain to work, right? This is where we get to start establishing position sizing and risk, which, as I mentioned earlier, I really want everybody to pay attention to how we're managing risk. If you don't manage risk correctly, you know what happens, right? So this is how we do it. So if this first 2-minute candle opens, and let's use a really, really simple example where I could risk $100 per trade, that $100 that I could risk allows me to establish correct position sizing based on the range of the candle. Okay, I'll go through a couple examples here, and then please stop me if you have any questions. Okay, let's look at an example. If the first candle from high to low, from the top of the wick to the bottom of the wick, because that's where our stop is, if it's only 50 cents is the range, and I could risk $100, how many shares could I buy? I know the answer's right here. Just think about that for a second, right? I can buy 200 shares. That's good. Obviously, the smaller the range of that first candle, the more shares you can buy, which is great. You want this candle to be small. In an ideal situation, now, obviously we don't control that, but if it's too big, then you don't really get to buy that many shares. It may not be worth it for you. Okay, let's look at another example. If the 2-minute candle has a range of $1 and I could risk $100, then now I could buy 100 shares. In the third example, if the 2-minute candle has a range of $2, right, I can buy only 50 shares. Do you see how the larger the range is here, the smaller amount of shares I can buy? So what I'm doing is I'm basically establishing my risk right off the get-go, and I do that in the first couple minutes. And if I know before I get into a trade, which you always should, how many dollars you can risk, then you should be able to establish very, very quickly in just a quick little math problem, how many shares you can buy. Does everybody understand this? I'm going to stop here and make sure everybody's up to speed. We got Mark, Scott, Boris, Todd, Frederick. What's up? Tagar. Hopefully I'm saying that right. Yep. Love it. Absolutely. Scott, gotcha. Julie, Gary. Okay, cool. All right. So what ends up happening here is, just like we thought, we get a little bit of a consolidation. Now you remember, at this point, we don't have any buy or stop orders yet. We simply are just watching. And the fact that we consolidated here is good. It means, okay, trade on. Now remember, if we had broken these lows, it just means no trade happens. We're not interested in shorting. You're likely going to get whipsawed. Something like that happens. The probability is not in your favor. We're only interested in buying above the high of the first 2-minute candle as long as it's above the 200. right? And again, I'll show you a slide later, but the opposite is true for, shorting below the 200. All right, so we went ahead and put our buy in right above here, our stop right below here. We got a quick little tail that whipped up. It went ahead and filled the position with 100 shares. A few minutes went by. You can see that we weren't stopped out, kind of whipped around a little bit, and that's why you basically put your stop there, right? It ended up going up, which is nice, and then we got a little bit of consolidation, and that's good. That actually allows us to slowly build a position. The trade is starting to work. It's building a consolidation, and at this point, we have some really exciting things that we can start to do. Now you can see that it started to establish these little low points in here. Can everybody see my little red dot? Right, hopefully. Now, at this point, because our entry is here, we could start to move our stop up below these little low points of the candles. And that allows us to dynamically adjust risk. It helps us squeeze our risk down. And because we actually have a consolidation here, this also allows us to potentially add to the position, which is so important. I've got a few slides that will explain this, but basically, a lot of people, when they're day trading, two things happen. Is either they take profits too soon or they add to losing positions, which both of them will get you in trouble almost immediately. We're going to do the opposite, right? If you think about this idea of like, a lot of people say, oh, like they throw out these random stats like 70% of traders lose or 80% or whatever that stat is. I believe 80% of stats are probably made up on the spot, but there you go again. But if you do the opposite, right, then you're going to be on the winning side of things. So here's the way we manage this trade. Because we have a consolidation, we're actually able to buy more shares, right? We're able to buy more shares on the breakout. So we can place a buy order for more shares. And this is where our strategy is unique, right? We're going to buy more shares on the breakout. As long as, and this is important, as long as we can move our stop up, we want our risk to be reduced. So here's the secret to this, right? Is you want to add to your winners. Adding to winning trades on a continuation breakout is allowing you to snowball your profits, but it's only something that you could do if you could reduce your risk. So here's an example. If the original risk, remember, was $1 and we got 100 shares, if after moving our stop up, our new risk is only 50 cents, then we could actually add another 100 shares to the position. And now we have 200 shares with the same amount of risk, right? This allows us to, as the trade continues to move in our direction, it allows us to shrink risk and build our position up without actually adding any risk to our position, okay? And so when you get these big breakouts, you just get these snowballed profits in your favor, okay? Again, it allows us to snowball our profits while maintaining a solid risk management position. Remember earlier I said I really want everybody to listen for how we're managing risk, which is so important when we do these things. We're dynamically moving our stop up and we're adding to position when it's appropriate as long as risk is still good. Now remember, most traders do the opposite. They take profits too soon or without a strategy. And if something starts to go against them, they're like, oh, well, I can get it cheaper now. And they add to losing trades. They're snowballing losses and they're taking profits too soon, right? And that's going to lead to an account getting blown up. We do the opposite. We add to winning trades and we shrink risk, right? This is why a lot of people end up failing with day trading or just trading in general. And this is why we're able to actually make consistent profits using this strategy. Pretty cool, right? Does everybody get that? Does everybody understand how we're able to build positions and build up our position size while actually reducing and shrinking risk? Let's see. Gary has a good question. Do we know our profit target in advance or is it based on hitting a stop? Great question, Gary. I'm going to show you how we're actually taking profits here in a moment on some of the next slides. Scott says, yep, take profits too soon, but I never add to losers though. That's good. Gary says, yep, love it. Scaling in, love it, scaling in. I got you, Scott, no worries. Okay, cool. Everybody's up to speed on that. So here we had another consolidation where we're actually able to add another lot of shares as long as we can continue to move our stop up, okay? Now this is where it's really important because now we potentially could have 300 shares as long as our risk is reduced to 30 cents. Right? We originally bought 100 shares here. We bought another 100 here. We moved our stop up dynamically, right? These are 2-minute candles still. And then we had another consolidation. We're able to add another lot of shares here as long as we can continue to move our stop up. And then all of a sudden we get a breakout. Now, a couple things happen when you get breakouts like this, especially if you have a position that's large. Now, large positions, as I mentioned, are fine as long as you're shrinking risk. Now, a couple things happen, and tell me, this is kind of funny, but tell me in the chat room if this has ever happened to you. Your trade starts to go in your direction, and instead of managing it, you all of a sudden start daydreaming about the money that you're making and what you're going to spend it on, right? You're going to go on this trip, you're going to buy this car, blah, 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 blah. I know as a personal trigger, as soon as I start thinking about the money that I'm making and what I'm going to spend it on, I know that's usually a personal trigger to take profits. Now, obviously, that's not our strategy, but just something funny that I've noticed about myself that I've noticed a lot of other traders do. Let me know in the chat room if you've ever done that. And that's also usually exactly when the stock reverses and you're like, dang, I should have taken the money when I was thinking about it. How many people have done that? Just out of curiosity. Yep, yep, yep. The other moving averages are, it's the 200, the 20, and the 8. We're mostly using the 200 and the 8. Yeah, your trading platform should show you that, Julie. Not understanding how you're adding profit if you're not out of the trade. You're actually not adding profit. You're profitable in the trade. You're adding more position to it. Yep. Gary's like, I just missed what you said because I was daydreaming. Edward says, yep. Michelle says, yes. Scott says, guilty. Haley says, I've even done that today. What are profit candles? I'll show you in a second. Okay, cool. Okay. So a lot of traders struggle with when to take profits. Again, for that reason, they start thinking about the money that they're making, right? And they gets themselves in trouble. And so what happens is their stops down here, the stock will go up, all their profits from the day start to balloon up. And instead of taking the money, what happens is they don't, because they don't have a good strategy for it. And then the stock usually reverses and then they get stopped out. Now they might still be profitable in the trade, but maybe 50% or 80% of the profits that they had have now been shrunk down, right? So we want to maximize the profits so that as the strategy balloons in profitability, we want to take profits at the very peak of that ballooning, okay? So to support you in this, we've created a strategy for taking money off the table using what we call profit candles, and we're also going to use the 8 simple moving average, which is shown here as the blue line. Can everybody see that blue line, hopefully? Now, a lot of people use moving averages as a crossover. When it crosses a moving average or something like that, that's not what we're doing here. We're going to use the 8 simple moving average, again, on these 2 minutes, and we're going to use it as a relative point. So you can see that for the majority of the morning, the stock has continued to hug, for the most part, this 8 moving average. As soon as it starts to explode away from it and it starts to expand, we're looking at where the stock is relative to that 8, okay, where it is relative to it. And as soon as it starts to expand out, this is what we call profit candles. It's expanding out. And in a lot of cases, it'll eventually snap back. And that's what we want to avoid, because then our profitability goes and shrinks down, okay? So what we want to do is we want to look for expansion candles when it expands again away from this 8 simple. And you can start to scale out of these trades. You can even start to take profits. Most brokers will no longer charge you for stock commissions, so you could actually scale out. You don't have to be all in or all out anymore because they don't charge you commissions, which is really, really great. You could also go from a 2-minute to a 1-minute really quickly, and you could quickly move your stop up below each 1-minute candle. That allows you to get out literally at the peak of the profitability, and it allows you to lock in profits and scale out near the top. Does everybody understand that? So what you're looking for is you're looking for an expansion candle away from the 8, and you can go ahead and start taking profits and scaling out. Like, let's say you've got 100 shares, you could take 50 shares off, something like that, or you can just continually move your stop up below each candle. I would suggest zooming into a 1-minute chart to do that, so that if it does snap back, you're literally taking your profits at the top. Gary says, you the man, love using the 8. Exactly. Max says, when exactly do you add to the position? You add to the position on the consolidation breakouts. Amanda says, cool, love it. Got it. All right, pretty cool, right? Pretty cool stuff. Trading guidance for shorting. It's the opposite is true. The most important fact we need to determine at the market open is where we are in relationship to the 200. Okay, we're only going to be interested in going short if it opens below the 200. We're going to use the exact same strategy. Nothing changes for shorting. The only thing that usually happens is stocks will drop faster. So you do have to be a little bit quicker, right? You know, a lot of people say stocks drop about 50% or 60% or whatever it is faster than they rise. I don't know if that's necessarily always true, but just something to keep in consideration. If you're shorting it, which is a great strategy, use the same strategy in complete reverse, right? Everybody get that? All right. So again, really cool strategy. Quick recap. Wait for the 2 minute to close. Use that to establish your position size. Confirm it's still above the 200. Place your buy above the high of the 2 minute. Stop below the low. If it triggers you in, you know, continually and dynamically move your stop up. If you get a consolidation, you can buy more shares above the consolidation as long as you're able to move your stop up and shrink your risk to an appropriate size, right? And then you can continually add to your position on each breakout. And then you use the 8 simple looking for the expansion, which we call profit candles, to start taking profits. We've just found, Gary, that the simple moving average works better for than the EMA. Yep. Everybody cool on that? So that's our day trading strategy. Super simple, like ridiculously simple. But again, when you're trading the first 30 to 60 minutes of the day, you got to keep it simple because you have to be really, really quick for it. Okay. Everybody up to speed? Now, today's kind of unique. I wanted to give everybody a bonus. This is our day trading strategy that we use for this first 60 minutes. Next, I want to show you our swing trading strategy, right? I'm going to show you 2 strategies today that I usually use in the last hour of the day. And again, the reason I'm showing you both is because I want to show you how to create a balanced trading day, okay? And by the way, this is a keg cup, and no, it's not beer, it's just water. If you're wondering, okay. Are we good? Okay, cool. So you can take the strategy I just used, right? You could use it on your own. I'm going to show you our swing trading strategy in a moment, but I also want to let you know that every morning we basically run a live day trading room where we have a host day trading the strategy live every day. And in a few minutes, I'm going to show you how to get access for a buck, which is pretty cool. Our day trading show is Monday through Friday, starts before the market opens. We're making 2 to 5 trades a day. All trades are called out live. This is our host right here. He's an absolute hoot, incredibly crazy good at managing risk, has a live trade room, everything like that. Again, I'll show you how to get access for a buck in a moment. But let me show you our swing trading strategy really quickly, okay? So I promised to give you 2 strategies today. You just learned our day trading one. Let me show you our swing trading one. And to do that, I'm actually going to come over to my personal platform that I built for our community, or I hired engineers to build. It's called Wall Street AO. This is actually where our day trading show is broadcasted from. Wall Street AO started out as a social network. We started to grow really fast. And then we started to build our own charting application, backtesting tools that I wanted personally for my swing trading. So what we're looking at now is a chart of Apple. Apple is one of my favorite stocks to trade because it's got a really nice beta. It moves really well. Its stock and options are incredibly liquid. I'm trading this thing all the time. Sometimes I'll trade thousands of option contracts in a month. I'm very, very lucrative options trader for Apple. And I have a very specific swing trading strategy that I've developed or invented or whatever you want to call it. Now, I'm using a different kind of chart than we're probably used to. This is called a Kanashii chart. Really simple is this is your candlestick chart. Here's your Kanashii chart, right? Candlestick, Kanashii. How many people here use a Kanashii chart or have used a Kanashii chart before? You could let me know in the chat room. What I'd also like to ask is how many people here, I guess a different question is, what's the big difference that you see between these charts? I'll just flip back and forth for a moment. Here's your candlestick. Here's your Kanashii. Kanashii, candlestick, Kanashii, candlestick. Okay. Now, the reason I like the Kanashii, and I think you're probably going to agree, is it smooths out the trend. It makes it easier to see directionality. And I've actually developed a really unique system that allows me to use the Kanashii chart to gauge momentum on a day-to-day basis, to know if that momentum is expanding or contracting, and to basically allow for a really easy system to get into a trade and get out of a trade. Okay, so a Kanashii is an aggregate chart, is what it's called. Everybody good on that? It eliminates the gaps. Yes, it does. No gaps. Gary says the noise is minimized. It's smoother. There's less noise. And I think that's the big thing, because when you look at a candle, there's a whole lot of noise in a candlestick, right? A lot less noise in a Kanashii. All right. So what we have here is Apple on a Kanashii chart on the daily. And so what we had built for our community is a really simple way for us to backtest ideas so that we can validate them before we put money to work. Okay, so on this chart itself, unlike a lot of charting applications, you can load up a bunch of indicators and you basically are forced to eyeball whether they work or not. Wall Street AO is really unique. Whereas when you load up an indicator, let me go ahead and show you, like let's load up the MACD. As soon as you load up an indicator, we actually give you a whole performance on how well that indicator is performed if you had used it to buy and sell. You could add multiple indicators together. You could stack them together. We allow for a lot of different indicators like ADX, moving average, MACD. You could actually backtest the Kanashii chart, RSI, stochastics, add profit targets, stop losses, trailing stops, all that stuff. It's really super cool. Okay, and then you get a whole performance on whether it works. And again, the whole idea there is when you come up with an idea and you want to test it, you should be able to do so. If you're using an indicator, you should also be able to test whether it works or not. And I think most charting applications have this big whiff where they give you all these indicators and they basically say, go ahead and eyeball it. And personally, that just doesn't work for me or my community. So what we're going to do right now is we're simply going to backtest quickly the Kanashii strategy. And essentially what we're backtesting now is buying on the first green candle at the close and selling on the first red one. Now, this strategy by itself is a very profitable strategy. It's struggling a little bit this year, and most of that is because of the volatility we've had to the downside. However, I've developed a really cool way to use what's called probability stacking to help eliminate some of this extra volatility caused by any kind of pullback. And essentially, the reason for that is it creates what's called a false start. Okay. Now, when you have a strategy where you're buying on the first green and selling on the first red, again on the Kanashii on the daily, and all of a sudden you get these situations where you have a green candle, but no follow through, guess what those are going to turn into? They're going to turn into losers. So we want a way to avoid those losers before they even happen, so that like our day trading strategy, if it starts to drop and we're like, okay, no trade, we want to have that same kind of risk parameters in our swing trading strategy so that we know when it's a higher risk, we're just like no trade. Okay, so here's how I do that. Okay, we've identified a couple things that you can do to eliminate these false starts before they happen. Again, what a false start is just this. You get your first green one, but there's no follow through. Let's identify a few more of these false starts. Let me just kind of look back. You can see here are some more false starts. Okay, let me see here. Here's some more false starts. You can see there's a few of them here. There's one there. All of these would essentially have turned into losing trades, which is, again, exactly what we want to avoid. So right now, again, what we're backtesting is buying on the first green, selling on the first red. Now, I'm going to add a moving average to this. And as I mentioned before, our backtesting platform here allows you to use what we call probability stacking. You can stack multiple indicators together and see how it would have potentially impacted your trade results. So what I just did is I added a 21-day moving average. And what I'm looking for is how it impacts my risk reward, my batting average, my overall profitability relative to the stock. And also these green candles here show me how profitable the strategy was every single year. I actually want a strategy that's been green all year, like every year for the last 10 years, right? Does that make sense? This is a daily chart. What's my time frame, Todd? It's a daily. Okay. What range of days? Right now we're backtesting 3 years, but you could backtest 1 year, 3 years, 5 years, or 10 years. Can candlestick patterns be seen on Kanashii charts? We don't do Forex. What we do is you could just click back and forth. We built a shortcuts mechanism so that you can press H for Kanashii and C for candlestick like this. You can't see my keyboard, but that's basically what I'm doing. And so what I found is, quite simply, when Apple is below its 21-day moving average, you're more likely to get false starts. You can see most of the false starts that I highlighted happened when the stock was below its 21-day. And right away, you can see that started to improve our results quite a lot. Now, what I've also discovered, and again, this is through my own personal trading over the last 10 years, and also just through our testing, is that the MACD is a really, really great momentum indicator. So I'm going to go ahead and add that to our test as well, to our, let's call it our strategy. Now, what we know for sure is that the MACD, when crossed to the bulls and trending higher, which looks like this, when this is so with the MACD, our bullish moves in the Kanashii are generally longer. And our tests show right, over the last 1 year, 3 year, 5 years, 10 years, that when the MACD is crossed to the bulls and trending up, right, or just crossed the bulls, these moves are generally 6 to 8 days or longer. When the MACD is crossed to the bears, similar to when the stock is below its 21, when it's crossed to the bears like this, right, the moves to the upside are only 1 or 2 or 3 days long, which again establishes a place where you can identify where the risk is. It's risky to buy Apple on its first green bar if the MACD is bearish or if it's below its 21. Okay. And so what we do is we simply just added a simple rule to our strategy. Just like we did with our day trading strategy, the rules help us establish risk, and everything in trading should be surrounded around your risk management. Okay. Now what we have is a strategy that says only buy the first green bar if it's above the 21-day. And at any point, if the MACD goes bearish, there's no trade. Okay. Just like in our day trading strategy where we have a situation where we can say no trade, we need the same thing for our swing trading. Okay. Now, all of a sudden, we have a strategy that's been profitable every single year for 10 years. It's got a 2.4 risk reward, which is governed by your average gain being 2.87, which is really good, and your average loss being only negative 1.2. This average gain to average loss relationship establishes a very profitable risk reward relationship. And the batting average is now 66%. Like, I hope you all realize like what these numbers mean. You know, you've got a strategy that's been profitable for 10 years in a row, a 2.4 risk reward, and a 66% batting average. Like, that's insane, right? But again, it's only there because of the way that we manage risk, and it's all about risk management. Trading should always be governed around risk management. Okay, I'm going to stop for a second and answer some questions because we've just covered a lot of stuff, right? So all of our backtesting is routed to the end of the day. That's why I said the last hour. Doesn't look like a lot of questions, so it looks like everybody is hopefully getting this, but it's a really, really cool strategy, right? It's my favorite Apple trading strategy. Now, we could totally geek out for hours on this, and we could continually tweak our strategy, add indicators to it, things like that. But right now, let's keep it super simple, right? Let's keep it super simple. Let's see. So is the exit for the swings on the change of a candle color? Yeah, exactly. So basically, we have a couple ways that this strategy could exit. Either we get our first red bar, or the MACD goes bearish, right? Somebody says, which platform is this? This is my platform that I built for our community. We have a really large community, over 1,000 people in our community, and growing constantly. Like I mentioned, we actually started out as a social network where, you know, we built a social forum. We have people who post ideas throughout the day. We have a crazy big live trade room with lots of channels where people are posting things all day. And what ended up happening was, as our forum started to grow, we started to get all of these people who are asking us questions like, hey, Micah, do you know how well it works if I use the MACD and the Stochastics together? Or do you know how well it works if I buy with this moving average cross? And back in the day, we were doing all these manual tests, which took us hours. And so I basically invested a ton of my own personal capital into building this platform. So instead of having to do all these tests manually for our community to help them validate their ideas or what they potentially read in other forums, we built a backtesting platform. And as of right now, we're the world's fastest retail backtesting platform, and the only one that I know of that's perfectly reactive. What that means is if I change this, let's say from a 21 moving average to a 50 moving average, the results get updated in real time in 1 second. Right? So that you can immediately see. You don't have to click a button. You don't have to do anything. It's updated in real time. And if I like this strategy, I can simply click follow, and our system will send you a start and stop notification as soon as this strategy starts and ends. It's pretty cool. And then all of your strategies that you're following are queued up in a really beautiful list for you to manage, basically right here. So this is all my strategies that I'm following. It's pretty cool. All right. Now, how many people here trade options? I know I mostly trade options, right? I mostly trade options. Now, what I just showed you as far as this profitability goes is the numbers are based off of buying and selling 1 share of stock, okay? So this is how much money you would have made if you just bought and sold 1 share. Now, for the most part, most people buy a lot more than 1 share. So you could leverage that out and times it by how many shares you buy. But a lot of people may also wonder, hey, Micah, instead of buying stock here and selling it here, what would have happened if I would have bought options, right? Amanda says mostly options. Me too. I'm mostly trading options. A bunch of people are saying yes, 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 options, 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 mostly options. Okay, then you're going to absolutely love this because, again, I think this is a first. What we did is we built a really cool options backtester that integrates beautifully into the stock backtester. Now, before you trade or backtest an option strategy, you have to have your buy and sell points. So our options backtester takes your exact buy and sell points from your strategy you're backtesting and applies it to an options test. So we just released this a few months ago. As far as I know, we're the only perfectly reactive options backtester in the world at this point. There's other backtesting platforms, but they're not reactive, is what we call it. When you make a change, the results update in real time. So we went to the Chicago Board of Options Exchange and we said, hey, we want to build this reactive options backtester. And they're like, do you know how many people have come to us wanting to build that? Nobody's been able to do it, right? Essentially, the reason for that is when you backtest stock, all you need is the 4 points of like open, high, low, close, 4 data points for each day, for each stock. So for stock backtesting, we're storing about 100 million data points in our platform for stock backtesting. And we're able to do it in a way that makes it perfectly reactive. As I showed you, whenever you update anything, you get the results in real time. You don't have to wait for them, okay? Now with options, because there's so much more data, instead of just the open, high, low, close, for every day, right, in the past, we had to know all the expirations for that day. For each expiration, we had to know all the strike prices, right? For each strike price, we had to have the calls and the puts and all the Greeks associated with it. It was 2 billion endpoints. And that's why the SIBO laughed at us when we said what we wanted to do. They're like, not possible. But guess what? We were able to do it. And we're storing 2 billion endpoints essentially in RAM. And we spend thousands and thousands of dollars a month on Amazon AWS to store our options data in RAM to make it perfectly accessible to make instant options backtesting. So circling back around, I hope I didn't geek out too much on that, but I'm a super geek when it comes to this. When you have a stock strategy, like the one I showed you, and we're only backtesting stock, and now you're like, hey, Micah, what would have happened if I would have bought calls? Or what would have happened if I would have sold puts? Or what would have happened if I would have sold puts to fund my calls? Those are all perfectly legitimate questions, but would normally take hours, right, for you to backtest. So what we did is we built an options backtester that integrates directly into our stock backtester. So now I could say what would have happened instead of buying the stock. What happened if I would have, I was on puts. What would have happened if I would have bought calls? We pre-made strategy templates right here that you can see for singles, verticals, calendars, diagonals, butterflies, everything. And everything is also interactive. So you can change it from out of the money to in the money, how many strike prices, how many days to expiration. And again, we made it reactive, which is what the SIBO said we couldn't do. So if you wanted to change it from 30 to 90 days, I changed it, and you can see in 1 second you have new results. Absolutely phenomenal job by our engineering team. And now you can test things in real time, which again, this used to take us hours to do. Now we can do it in 1 second. So let's say you wanted to test buying calls with the strategy that I just showed you. You can now do that. You can test in the money and out of the money. I found personally that 1 strike out of the money, 30 days out for this strategy works the best. Please tell me if I'm talking too fast because I have a lot to cover and I wanted to make sure I got everything covered. Now, we also built it in a way that does probability stacking or stacking strategies the same way our stock does, right? So if you wanted to say, well, Micah, what would happen if I bought calls, but if I would have shorted puts to fund those calls? Well, you could stack it right up and do it, right? Or you could say, hey, Micah, what would happen if I would have bought a vertical spread, right? And shorted a vertical spread to fund it? Well, you could backtest that too, okay? Right here. Now, let's also say that you have the strategy you want to do and you want to geek out and come into the data a little bit. You can come down here and see all this beautiful data, but you can actually click into each one, into each vertical, into each thing, and you get all the trade details from how much you made, which strike price, from every single trade that happened in the past, the entire history of it, which triggers entered it, which one exited it, because again, we have advanced exit conditions, and all the Greeks associated with both opening and closing the trade. It's absolutely like a phenomenal amount of data, and it all gets registered in 1 second, which is quite a feat of engineering. So anybody here, I said, trade options, like you will super geek out on this options tool. Okay. And the whole idea behind having all this data is for you to make smarter decisions around your trading. If you knew that by buying this call instead of this call, you would have made 200% more, wouldn't you want to know that information? There's a lot of times that we may or may not be buying the correct option, and we're still getting into the trade. You want to leverage your time, right? You want to leverage your time. So we want to make sure that the strategy we're using is the absolute optimal strategy. And in the past, to find out, you would have either had to, trade it and figure it out over time by either making or losing a bunch of money. It could have taken years. You would have had to back test it manually, which would have taken hours and has a lot of room for human error and, lots of headache. But now you could actually use Wall Street AO, the platform that we created for our social network, for our community and our friends, to backtest stock strategies and indicators, as well as pretty much any option strategy you could ever come up with in the way that we built this tool. Is that rad or what? Somebody says, Amanda says, mind-blowing. Thank you. You totally get it. It is mind-blowing. And I hope I didn't geek out too much on all the software stuff, but yeah. Scott says, this is so cool with 3 O's. Gary says, excellent presentation. You're very knowledgeable, but you look like you just graduated last year. I'm 36. But yeah, thank you. I'll take that as a compliment. Tim says, credit spreads are my life. You could backtest credit spreads, mostly options, lots of people trading options. How cool is this? How cool is this? How long to learn? A couple hours at max. Here's the cool part is we have live shows throughout the day, throughout the week that help you get up to speed for it. How far back does the testing go? You could test 1 year, 3 or 5 years, and 10 years. Geek. I'm a geek, I know. We don't integrate with Thinkorswim, unfortunately, right now. They've got a pretty hard API. Yeah. But so far, we're pulling our stock data right directly into the platform. Our feed is live, and we pull all of our options data from the SIBO. And you actually have the option with the options data to use end-of-day options data or 15-minute before end-of-day options data, which again, doubled the size of our database, but made it a lot more accurate. If you ever notice that right at the closing of the day, option spreads widen, which gives you in our opinion, an inaccurate test. And so we give you the option, like we default it to 15 minutes before end of day, but we give you the option. Okay. Yep. Works for weekly options. Exactly. We don't have Forex or futures on the platform yet. Okay. Now, some of you may be thinking, this is really great, Micah, but I don't know how to backtest. I don't know how to come up with any of my ideas. How am I supposed to use this platform if I potentially don't want to backtest? So what we did, because with that in mind, what we did is we built our system in this really smart way where every time one of our community members backtests one of their ideas, it's pushed through a 10-factor rating system, which takes into consideration batting average, consistency, basically a 10-factor weighting system that I developed that rates a strategy from an A to a B, et cetera. And whenever a member of our community finds a really good strategy that's pushed through our system and it comes up really hot, we make it available to everybody via our Discover feature, right? So some of our members don't ever want to geek out on their own strategies, and that's perfectly fine. They can simply piggyback on the great strategies that our community members have already found by using our Discover feature. You could rate it by our rating and then just follow those strategies if you want. We call it crowdsourced strategies, right? It's really, really super cool. Now, let's put these pieces together, right? Because in the beginning, I showed you this day trading strategy, and then I just totally geeked out on this swing trading strategy and options backtesting and stuff like this. Now, Wall Street AO is kind of like this all-inclusive platform that we built because we do understand that not everybody wants to swing trade, not everybody wants to day trade. Some people want to do a little bit of both. Some people want to use Elliott. Some people want to use other things. So what we did is we built Wall Street AO to be this all-inclusive thing, right? So up here you have your super geek out stock backtesting and options backtesting and the ability to get start and stop notifications. We built a full social forum that includes a live trade room that is packed with people all day. We built a really great university with getting started videos that'll help you get up to speed really quickly, as well as some really great training on how to use all the indicators in our backtesting platform. And this all comes with membership. Now, the day trading thing. All of our broadcasts for the day trading show, and I actually do an hour a week for swing trading, are all also within the Wall Street AO platform. So our day trading show is actually accessible within the Wall Street AO platform, right? So I can just click here, I can click enter meetup. Our day trading show has its own channel for chat, and I could watch this. We're usually live for about 60 minutes to an hour a day, and it's all included inside the Wall Street AO platform in one cool little website, so you don't have to go anywhere else for it, okay? Now, I know that there's probably going to be a lot of questions, and earlier I showed you that basically we're going to give you trial access for $1. So let me take a minute and kind of cover everything that's included, and we'll post a link up here for you to come and check us out. Okay, so let's see here. Let's see. All right, so the Wall Street AO platform, again, is this like all-inclusive thing. What we're doing right now, just perfectly straightforward, is we want to give away a 14-day access for only $1. Now, what you're going to get with that is you're going to get the full Wall Street AO platform, which includes unlimited strategy notifications. That means that if you're backtesting a strategy, or if you find a good crowdsourced strategy, you can follow it, and our system sends you start and stop notifications on the daily about an hour before the market closes that says, hey, that strategy you're following, it's starting today. And once it starts, we say, hey, it's on day 2, day 3, day 4, day 5, and then it says it's ending today. The reason we show you the whole lifespan of the trade is because we know the average days of the trade beforehand. For example, my swing trading strategy, when the MACD is bullish and it's above the 21, will last 7 to 8 days. And so if you're in that trade, you want to know when you're on day 8, because that's about when you're going to be taking profits. Again, that's about managing risk, managing expectations, managing the trade. And so you'll have unlimited strategy notifications with our platform. You have unlimited stock and option backtesting. We don't limit it at all. Unlimited stock and option backtesting. Unlimited strategy scanning using our Discover feature. You're going to get access to daily live coaching. Again, I'm live every Monday. On Tuesday, we have a live Q&A about our platform. And 5 days a week, we have a live day trading show. So it's also going to include the live day trading show. And I know this is crazy because we're kind of bundling everything up, but this is how our platform works. It's all kind of all in one. And it's 14 days for $1. Is that cool or what? Let's take questions. And I know we're going to have some questions. Do you trade futures on this platform? Not yet. Does it work for weekly options? Yes. Gary, we're working on that journal. Can you show use of A? Winning percentage, correct, Frederick. Thank you for posting the link. It's wallstreetao/special. Yep. Tim, that's accessible through our Tuesday Q&A. Scott just signed up. By the way, if you just signed up, let me know. I'd like you to welcome you to the group. You mentioned Elliot. So here's what we do for Elliot. We actually have a variety of contributors on our website. I do swing trading. Slawik does day trading. Andy does Elliot trading. And here's how we support you with Elliot. Every day he does an Elliot chart on the SPX and a few other stocks by recommendation. And those are posted right in our community to support people in Elliot. Andy is also in our chat room. He's one of the most advanced traders in our community. And so if you have any questions about that, tap him for resources for it. We've basically found contributors in each niche of the market to make sure that we have the whole spectrum of markets covered for our community. Okay, how much is it after the first 14 days? Exactly, good question. Let me show you that in a moment. Okay, so a couple other questions. How much is data? Data comes free, we pay for the data. Next question that a lot of people ask is it an app that you download? No, we're web-based, so you can access it via your browser. As long as you have internet, we recommend using Chrome. You could access it. You don't need to download anything, which means you could use it on a Mac or a PC. And again, this is for the live day trading show, and my swing trading strategy, and stock and option backtesting, and this wide platform thing that I just showed you, right? Okay, so let's talk about what happens after the first 14 days. So if you click that link, this is the form you're going to see. We're basically going to ask you for your first name, email, phone number. You're going to create your own username and your own password. You put in your billing information. Okay, and here's our pricing after the first 14 days. You have your choice. we give huge discounts when you sign up for more time. So if you want a plan that is as little as $80, right, a month, billed annually, then you can sign up for an annual membership. This is going to save you 40%, right? So if you sign up for the $1 and you're like, love this thing, email us, we'll swap you to annual right away. And at the end of the 14 days, and essentially it's only $960, basically $80 a month billed annually. You could do quarterly or you could do monthly. It's automatically rolled into monthly, which is $140. Okay, but we give you the opportunity to upgrade at any point to crazy good value at only $80 a month billed annually. If you'd like to, just email us. We're on top of that for you. So 100% transparent in our pricing here. Huge discounts when you make a commitment to more time. I do have to tell you that almost half of our community, and like I mentioned, there's over 1,000 members, choose annual membership. Now that should tell you a couple things. One is that there's crazy value in our annual membership, obviously huge discounts, but it also tells you that once people come into our platform, they meet our community, they start using our tools, they immediately upgrade to annual because they absolutely love what we're doing. Okay. Nope, we're not auto trading yet. We are not a broker. We're a research and analysis platform. How long will it take to use? I would say within a couple hours, you should be up to speed. We also can do onboarding. So if you need a 20-minute call to help you get up to speed, no problem at all, right? We are really, really wanting to make sure that everybody knows how to use our platform. So we have a great process for that. We don't have lifetime pricing, but let's say we go up to 5 years, which I think is about $39.99, right? Which again, is a great deal. So if you want a 5-year membership, we could do that. Again, that's going to save you a ton. Yep, exactly. You do analysis on our system, and then you can place the trade. John says, show us the seasonality. All right, cool. I didn't even have a chance to cover this. By the way, like we are incredibly feature rich. And so I didn't have time to cover everything today. Somebody asked about seasonality, which we do offer. Here's our seasonality. Seasonality is really cool. This shows you the month-by-month profitability of a stock. And the really cool part about this is it's either inclusive or exclusive of your strategy, which means if you want to know the seasonality of the strategy you're back testing, you simply go to seasonality and load up your test. If you want to know what it is without it, you can just disable it. And here's pure raw seasonality data. Okay. So if you think about what we offer, like these seasonality tools, by the way, should be $100 by themselves a month. Our day trading thing should probably be $200 a month by itself. Our stock back testing should be $100 a month. Our option back testing should probably be $300 a month, but we've bundled it all into this really unique platform, an environment for people to learn and social network. And we kept our pricing really, really low because we really want you to succeed in this. Okay, great question. Thank you, John. Let's see. Great webinar. Thank you, John. Thank you. I'm not going to be able to take phone numbers or emails from this, but please, if you want a call and an onboarding, email our support or just respond to your receipt. Okay. Awesome product. Thank you, Bob. Okay, so a couple follow-up questions because I've only got 4 minutes left. I've shown you a lot today, and I apologize if I overwhelmed you, but I had a lot to teach you today, and I really wanted to jam it all in. I showed you a really great day trading strategy. And I showed you that we do the strategy on your own, or you could come and watch us do it every day, right? And then I showed you my personal favorite swing trading strategy. Showed you the results, how it works, how our platform works for stock and option back testing. My question to you is, what has been the biggest highlight for you today? What did you learn from either my day trading strategy or my swing trading strategy to create a balanced daily trading plan, either from one or the other or both? What was the biggest highlight in what you learned today? I'm curious as a presenter and as a trader. I'm always trying to improve. And so I'm curious, what was the biggest highlight for you today? No, I don't trade other people's money, but I get offered that every day. Red says your complete system idea. I like that. Position sizing, cool. The daily trading process, Red says impressive. Swing trading, got it. Understanding how to trade the first hour, got it. Which strategy makes more money? The day trading thing is going to be faster money because you're in and out throughout the day. The swing trading strategy is going to take a little bit longer, but if you use options, your leverage gets expanded greatly. James says the holistic trading. Nick says the high Kanashii in combination with the 21, and don't forget the MACD. James says the daily approach is great. Amanda says, I'm thrilled to see a backtesting platform that actually does what I've been looking for. Thank you, Amanda. I hope you take us up on this offer, like I said, for 14 days for $1. I hope to see 100% of the people that are here signing up for this. I mean, come on. Let's see what else. Red says, impressive. Your complete system, the day trading piece, options backtesting was very good. Thank you. I really enjoyed this presentation. I'm excited to do it. The highlight was the backtesting. Okay, cool. What other brokers does the software work? We don't integrate with any brokers. We're research and analysis only. I personally use Robinhood because I don't get charged for option commissions. And like I said, when I'm actively trading a lot, I could place 1,000 option contracts in a month. Do we need courses with the website? Those are all included inside of our university for that. And like I mentioned, every Tuesday we have a live Q&A about our platform. And every Monday I'm live for an hour, which is our most popular thing. Portfolio management methods. You can learn position sizing and thing from our education on our university. Good questions, everybody. This is great. All right. Daniel, maybe I missed your question. I apologize. They came in really quickly. My question's not being seen. Question about the recording. All right, cool. James, good to see you, buddy. Mark says, great integration of technology and financial functionality. Love it. Questions about the replay. LG says, your platform and presentation was excellent. Thank you, LG. I love it. Question about the 5 stocks. Apple's one of them. MU's another one. Twitter's another one. There's 3 of them. It'll learn the other ones in the morning if you join. Remember, we're starting tomorrow morning, 5 days a week. James says the daily approach is great. Impressive technology. Thank you. New to trading. It's not easy, but if you 2 things, you got to use good risk management, right? And it also helps when you can see somebody do it live every day. Okay. Daniel asks about risk down in day trading. Remember, if you're risking $1 with 100 shares and you can add more to it and squeeze your risk down to 50 cents, that's how that works. All right. I am on the top of my hour. I know I covered a lot, so I'm going to finish with this last slide. Wall Street /special, $1 for 14 days, and then it rebuilds into monthly. If you want to upgrade to annual to get a bigger discount, we can do that for you. We're giving away a ton of stuff here. I hope you realize the value of everything we're giving you. And I think that's pretty much my time. If there's any other questions, I'm going to feel free to answer them. But I think that's it. Let's see. Thank you for posting that link. Hope to see everybody in our community. Like I said, I'm live every Monday for an hour. Thank you, Julie. I appreciate that. Covered too much. Yep. I can hear you great.
You should say hey to Johnny. He's next.
What's up, Johnny?
Where is he?
Oh, man.